Good afternoon. Thanks for tuning in. You're watching Ask PQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
And I'm Alex Matthew. Well, if you've got questions on equity, then this is the perfect show for you. You can send those questions in to us on Twitter, Facebook, YouTube, and WhatsApp, or you can call us on 022-454-04141. Alternatively, you can mail us on askpq@bloombergquint.com. Just make sure to add the Ask PQ hashtag.
Okay, but before we get to the individual queries on the show, let's tell you what's happening with the markets this Monday afternoon rather. It's turning out to be more of a stock-specific day because if you look at the indices right now, Nifty is having a range-bound session. It's still around those levels of 11,030. Bank Nifty has been a little bit muted on back of HDFC Bank's earnings today because that's got a big weightage in both Nifty Bank and as well as Nifty, so that's reacted negatively, hence the reason why Bank Nifty is underperforming. But if you look at the broader markets, so far it's been a mixed session there as well. But the advance decline ratio, I believe, so far has been in favor of the advances, as you can see it on your screen. Among the Nifty constituents, let's just pull up the contributors list, the stocks which are contributing to the gains today. So ITC, that's contributing 22 points to the gains that you're seeing on Nifty. So had it not been for ITC, probably index would have been just about flat in today's session. HUL has bounced back after seeing some correction post its earnings. And clearly UPL seems to be the stock of the day. Street has given a thumbs up to the deal they have signed, so that's up almost 13 to 14%, contributing 6 points. ICICI Bank is in focus on back of earnings this week. What's capping the moves on the upside are stocks like HDFC Bank, as I mentioned, that's got 11% weightage on Nifty. Reliance Industries another heavyweight, and clearly it's not turning out to be a great day for the auto pack. And well, talking about the auto pack, the Nifty Auto Index is your top sectoral loser today. If you look at stocks like TVS Motors, also that's the auto index now almost at day's low, down 1.3%. Hero MotoCorp has touched its fresh 52-week low. If you look at the constituents today, TVS has also touched its fresh 52-week low. Look at that, Hero MotoCorp is now down 8%. That's it should be at day's low right now. Bajaj Auto, after falling 8% on Friday, is down another 5.5% in today's trade. FMCG pack is doing well, so you've got stocks like Godrej Consumer, HUL and ITC, the stocks that we've already highlighted among the Nifty constituents. The Godrej Consumer is doing pretty well in today's trade. The cigarette stocks are up, reason being there was no mention in the GST Council meet with regard to compensation cess. VST reacting on back of numbers as well, but some bit of temporarily positive news coming in there. Godfrey up 7%, ITC heavyweight up another 4% in today's trade. Quickly want to highlight a couple of results reaction, then pull up stocks like Bata, Havells, L&T Holdings. All of them have reacted positively to the earnings. Havells is also reacting probably with revision of the GST rates that has come in for the consumer durable space. And also on the downside, reaction has come in for stocks like MCX, South Indian Bank and Just Dial. All of them have seen sharp correction so far. Alex.
All right, let's get our two experts in for the day. Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stockbrokers are here to answer all of your queries this afternoon. Thank you so much, gentlemen, for joining us on the show. Let's take the live queries straight off the bat. The first query coming in is from Nitish Dohare on YouTube. He's asking for a fundamental view on SBI life insurance for the next 2 to 3 years. It seems that Nitish has already bought the stock, but he hasn't provided us with an acquisition price. He's asking if the current price of 639 or 640 is the right level to add more. I'm going to go across to Parthiv. Parthiv, what's the view here? 2 to 3 year holding period. We've discussed the fact that these life insurers, it makes sense to hold for the long term, but 2 to 3 years, do you think that's a long enough period?
Frankly, I think out of all the three listed life insurance companies, namely HDFC Life, ICICI Prudential Life and SBI Life, I think no two ways about it. The valuations of ICICI Life and SBI, they are a lot more lesser as compared to the market leader, which is HDFC Life. But we have time and again preferred HDFC Life to be had in the portfolio because of their first mover advantage, especially in the protection business. And most importantly, we have seen a huge scale up in terms of the margins that they've shown in Q1, which seasonally is not extremely strong for them. Q4 is seasonally very strong. So if in Q1 they could deliver these numbers, then we are very confident for entire FY19. Their numbers could be extremely good. But nonetheless, I think there's a lot of headroom and growth for many of these players. And if he is bought into SBI Life, no harm in terms of holding on to that stock. But if you're sitting on on some sort of loss, not a problem. Don't sell it in panic or don't even add here. The reason being that we are very confident that even in the upcoming quarters, players like SBI Life would be in a position to improve their value of new business margins. So you will definitely see an upside in this stock. But the new money that you plan to park in SBI Life as a more to cost average, I would rather suggest put that money in HDFC Life so that you would have two different company shares, and also you have two kind of main players in the life insurance space, so you can diversify your risk accordingly.
Okay, that's HDFC Live for you. Let's quickly move on and get some views going on technical front as well. Nikhil on YouTube, he wants a view on MCX. He's bought at 790 levels with a 1 month time horizon, and now he wants to know what to do. Remember, the earnings had come. Operating performance did look pretty strong for the quarter, but the stock has reacted negatively, down 5%. He also wants to know if this is the right time to enter Bharti Airtel for short term. Amar, if I could come to you, first a word on MCX, bought at 790. What would you suggest after today's sharp correction?
I would say that the stock overall seems to have formed a bottom technically, and around 720, which was made in the first week of July. So somewhere 710, 720, that's a very strong support zone for the stock. But the stock consistently needs to trade above 780, 790 levels for any meaningful rally. The long-term trend for the stock still remains down, but the short-term and the intermediate-term trend, as I said, is overall positive. So there is a possibility of a bounce back. So ideally, the stock does not seem to be able to trade consistently above a major level of 870, 880. So what it effectively means is that if he gets an opportunity, he should definitely exit, because the stock is likely to run into extreme resistance somewhere first around 790, 800 levels, and then if it reaches that, then 880, 890 on the upside.
Very quickly, Amar, is it the right time to take a position on Bharti Airtel at current levels?
Yeah, talking about Bharti Airtel definitely seems to have formed a bottom. And the support which it has around 335, 340 levels clearly reflects that support is likely to hold. So the stock can be bought with a stop loss below 340 and a target of 375, 380 on the upside.
All right, the next question we have on YouTube is from Vivek Kanodia. He's asking if it's the right time to invest into Petronet LNG at the current price, which is 207 or thereabouts. It's not too far away from its 52-week low, which was around the 200 mark. I'm going to go across to Parthiv because the question is for the long term. Parthiv, does it make sense to enter Petronet LNG? It's seen correction of about 18% so far this year.
Yes, absolutely. I think it has certainly corrected a lot, and I think the valuations have now become a lot more rational than in the past. Yes, there were some concerns in terms of the margins that they were earning and also in terms of the volume-led growth. But I think we're extremely confident that this company, which is catering to many of the industrial customers, whose demand is certainly going to rise, and also they've been working on their Dahej terminal to increase the capacity, and the utilization levels out there are quite good. But the Kochi terminal, where they are awaiting the GAIL gas pipeline to be laid out, once that is there, I think we'll see good volume growth and decent margins with good cash flows being generated. So on the whole, I believe that this is a good company to hold on to. Yes, the stock has certainly corrected, but I think now is a good time to kind of have more kind of add to your positions, or if you're not bought, add new positions and give it at least 3 years. Within 3 years, we are expecting all these triggers that I just mentioned to pan out, which will help the stock to get re-rated further.
Okay, that's Petronet LNG for you. 207 is the current price where it currently trades. Let's move on. I think we've got a caller from Patna. Ujjwal Kumar calls us. Hi, Ujjwal. Good afternoon. Tell us what's your query on.
Hi, good afternoon, Alex, and good afternoon, Navneet.
Go ahead.
Ma'am, I am having 5 shares of Hero MotoCorp at 3,300 average price. Okay. Shall I buy more at these levels, or some more correction is expected?
Okay, Ujjwal, what's your time horizon?
It's long term, for 1.5 years or 2 years.
Okay, 1.5 to 2 years. Ujjwal, I'm going to club your queries with certain other viewers as well, because we've got a whole host of queries coming in on Hero MotoCorp, considering the stock has, corrected almost 8% in today's trade. Deepak Batra wants to know, is it the right time to buy? What's the long-term view here? And also Ujjwal Kumar, who writes to us on YouTube, he's asking if this is the right time to enter into this stock. And it's not about Hero Moto. In fact, the two-wheeler stocks have come under pressure. You look at Bajaj Auto, then the earnings came on Friday. Volume volume growth has been pretty strong for these space, but I think their pricing pressure and also losing market share fear, that's not auguring well for this sector. Parthiv, let me take a fundamental view for the two-wheeler stocks and specifically Hero MotoCorp. The results come in day after tomorrow. What's the reason for an 8% correction that we are seeing today?
See, I think mostly it's due to the commentary of Bajaj Auto. That is our sense, because I think Bajaj Auto, for the first time ever, I think trying to be aggressive in the domestic market where Hero MotoCorp has an extremely strong foothold. I think they are willing to take like a hit on the margins to try and gain more market share, which probably I think sentimentally is acting slightly negative on likes of Hero MotoCorp. But I feel that this reaction in many of the two-wheeler names is slightly like overdone, and I think if someone wants to have a fresh entry into these stocks and especially having a 2 to 3 year view, certainly go by Hero MotoCorp. One reason that I foresee is that there will be a lot of rural related development taking place over the next 2 years and especially going into elections next year. And this spend would definitely help a player like Hero MotoCorp, who has 50% of sales coming from the rural market. So I think in terms of the volume growth, we are quite confident that Hero MotoCorp would be able to maintain its tally. But yes, I think one will have to keenly watch how the margins pan out. But even in the margins front, I think Hero MotoCorp should do well. So I think this correction is a decent entry opportunity. One can go in for a quality stock like Hero MotoCorp for the longer horizon.
Parthiv, I'm just going to take that little bit more forward because it's in news today. So if somebody has bought Hero Moto at higher levels, and even if you've not bought, Parthiv is, by the way, suggesting you can look to buy at current levels. But what about Bajaj Auto? If I were to look at the valuations, I think it's just about 14-15 times on FY20 basis for both. Which is a better bet, Bajaj Auto or Hero MotoCorp, or it makes sense to buy both?
Yes, even Bajaj Auto, I think, has substantially corrected post the numbers, especially due to the margins miss. But I think one should not write off a company like Bajaj Auto as well, because a good amount of their exports comes from countries like Nigeria, Kenya, and many of the countries which are impacted positively by a higher oil price. So we are quite confident that Bajaj Auto would also be able to maintain its export run rate, which comes in with a reasonably good higher realization. Their KTM business is doing reasonably well. So I think as a natural hedge, Bajaj Auto as an export play and Hero MotoCorp as a domestic play, it won't be a bad idea to have equal amount of capital allocated to both of these two-wheeler plays. Both are quality stocks. Both are generally, I think, whenever they have been bought over such massive corrections, have delivered very good returns over the next 2-3 years. And the viewer has a longer horizon of 2 to 3 years, then I think no harm buying into these blue chip names.
All right, let's turn to Facebook now. Asad Hamid Khan is holding Precision Wire, he says, for the last 2 to 4 months, and he's making a loss of 2 lakh rupees. He says, I don't know what his acquisition price is, but the stock is currently trading about 3.8% higher at 232 levels. It's seems tremendous returns if you look at a 12-month period, but year to date it's seen significant correction as well. I'm going to turn, in fact, to Amar. Amar, can you see something on the charts that would suggest that this stock is heading higher? And also, if you're, while you're at it rather, we've got this same viewer asking about the way forward for PC Jewelers. Can you really extrapolate anything from the numbers? There's so much volatility in that stock.
Yeah, first I'll talk about Precision Wires. Precision Wires has been on a continuous slide from almost 325 levels, 330 levels, and it seems to have formed a bottom at around 210, 215. So currently it's around 232. Overall, if I look at the long-term trend, for the stock still remains positive and bullish. However, the short-term trend, I would say, still remains bearish. But still the stock has been, since it has been beaten down and it is in oversold territory, so there is a possibility of a pullback. Now the levels to watch out for this particular stock is on the upside is 240.45. That's the first level of resistance zone for the stock. If that level is breached and the stock consistently sustains above that level, then we can expect the stock to trade towards 255, 260 levels. But higher levels could meet with selling pressure. Talking about the other stock which you mentioned, PC Jewelers. If we look at PC Jeweler, what we see here is that the stock is now seeming to form some bottom, and somewhere around 90 odd levels it has got some support. But I would say that still the stock remains in a downtrend, so a pullback could meet with some selling pressure as well, because till the time the stock is not able to trade consistently above 105, 110 levels, there could be some consolidation in the stock. the stock could go in for sideways trading between 85.90 on the downside and 105.110 on the upside. So the stock is actually likely to trade in a range.
Okay, remember the stock has been beaten down this year and there's been some recovery which has kicked in since Friday. It was up 20% in trade. Today it's up almost 12%. Let me take the next query on LIC Housing. Let's just pull up that stock. Ayush Shen on YouTube. He's bought 7,000 shares of this company at a average price of 611 on a longer term basis. He wants to know what to do with this one. So 611 current price almost down by 100 rupees. Parthiv, what would you suggest? Would you suggest to add more or just stay put on LIC Housing or exit and buy something else?
I think in case of LIC Housing, they will be relatively at a better position in terms of the incremental cost of borrowing, because I think of the rating and because of the pedigree that it has as compared to many of the other housing finance companies. So it will be interesting to see how the results pan out for Q1, wherein I think we have seen an impact in many of the NBFCs in terms of higher cost of borrowing due to the yields inching up to almost 7.80%. So I think maybe now is not the best time to exit such a name. Yes, I think the stock has been beaten down from the peak and the valuations have become a lot more rational now. Rather, I would suggest if one has a longer horizon of around 3 years, not a bad idea to cost average it here. And I think we are very hopeful that eventually, once the oil prices also cool off and the yields also come off, because there will be massive selling even in the bond market by many of the foreign portfolio investors. So once that thing rationalizes, I'm quite confident that we'll see a decent rally in many of the NBFCs, including LIC Housing Finance. So do cost average a bit and also hold on for the next 3 years. I think you'll be fine in this count.
All right, another query coming your way, Parthiv. This one from Shubham Garg. He's bought 25,000 shares of Federal Bank at an average level of 102 for the long term. You actually saw that stock move up last week after the earnings came out. The earnings were, well, relatively better than some of the other banks in the space. But then it's more or less capped those short-term gains that it had. Parthiv, what's the view for the long term? He should hold on?
Sorry, please contest that.
Federal Bank.
Yes, I think certainly. I think this quarterly results and the slippages, and I think it was a very, very positive surprise. And no doubt the street reacted very positively, gave a big thumbs up, because stock was almost hitting its 52-week low going into the numbers, and the numbers were a positive surprise, especially after the Q4 results that they delivered. So overall, I think the stock should do well, and I think this is the story that we are playing out. Many of the mid-cap private sector banks, whose valuations are not extremely stretched, and I think can deliver very good return ratios going ahead. With the scaling in the business operations, they're getting operating leverage, they're well capitalized, and also the market share that is transitioning from many of the mid cap and slightly larger cap PSU banks to many of these names is certainly going to be beneficial over the next 3 to 5 years. So certainly I think hold on to this position and give it another 3 years for it to perform.
Okay, that's Federal Bank for you. The stock had surged post its numbers, and after that I think there is a bit of cool off that we've seen in the last 2 to 3 sessions on that. Our next query is on Leel Electricals. Let's just pull up that stock. Praneet Kumar is asking what's the right price to enter this stock? He's looking for a fresh buy, I believe. So Amar, I'll come to you. The charts, I'm sure, are not looking that great because the stock seems to have corrected a lot. I remember this used to trade somewhere between 220 or even it touched levels of 250. Has it corrected a lot for somebody to pick up at lower levels, or do you see more correction in the near term?
Could you just repeat the name of the stock?
Sure, it's Leel Electricals.
Actually,
Okay, I think the erstwhile name was Lloyd Electricals. This is a post they sold their AC division to Havells. The name was changed to Leel Electricals. It's down almost 70% for the year. Let me just check with Parthiv. Parthiv, I remember chatting about the stock with you even in the past. They've been sitting on a lot of cash post the deal with Havells, but the stock's corrected so much. What would you suggest somebody if they're looking for a fresh entry here?
See, frankly, Navneet, I think there are better options in this space, especially in this hardware contract manufacturing space, where I think Leel, which was formerly Lloyd, has sold off its most important division in the brand to Havells, and now they're sitting on cash. And we had also discussed prior that sitting on cash does not make, I think, any value for the existing shareholders. Yes, I think one feels nice about being a very strong balance sheet company, but unless and until where that cash is going to get deployed and earning better return ratios, market is always wary and always tends to discount this cash at a massive level. And probably I think this was a stock which was certainly very hyped up and overowned. Many HNIs and PMSs held on to it, and then with the mid-cap carnage, we have seen a mass amount of exits. As a result of it, the stock is hammered down to shape. So I think I would still prefer a company like Dixon Technologies in this space, which will be beneficiary of the many of the import duties that have been levied on many of the parts. And I think they're continuously having good relationships with their customers. They're having a JV with Flipkart to supply televisions, washing machines with their own brand, which is Mark. And I think that's certainly gaining a lot of traction. So I think it's better to park money into such names as compared to leave.
All right, we've got a question from Mohan Rangdal on Facebook. He's asking about Venkys. He bought about 10 shares of Venkys at 2,384. He's lost a little ground there, though the stock is up about 3% and it's trading at 2,021, so significantly below his buy price. He's got a long-term view. He's asking whether he should hold on to the stock. Parthiv, what's the view here? A lot of people have talked about Venkys with regard to the consumption story going forward over the long period of time. What's the view here in terms of holding on to the stock for the long term?
See, yes, absolutely. I think the thing is that this stock was also like stock which kind of defied gravity when it was going up, and it was continuously getting re-rated. And probably it seems the way the stock has come off, there's been a huge amount of kind of profit booking. And I think, yes, there is seasonality and earnings volatility in this case. They tried to create a good brand, and probably there were expectations that GST would be beneficial. But even here, my sense is that the valuations are not at all very comforting. So I'm very wary of advocating such stocks where there is not valuation comfort, because any miss in the upcoming earnings, we've seen what punishment the market gives to companies where the valuation comfort is not there and the earnings are missed. So I think at the best is avoid for now, Venkys.
Exit at this point, booking losses?
Yes, I do feel I think it's better to kind of exit at this juncture, and I think wait out for the results. And probably, I think if at all you still want to own this stock, then you will certainly get lower levels as compared to what is available right now.
Okay, so that's the view on Venkys India, but we've got a whole host of other queries that are coming in, and I think we've got a caller called Naveen who calls us from Bengaluru. Hi Naveen, good afternoon. Thanks a lot for watching our show. Tell us what you want to know from our experts.
Good afternoon, everybody. I had a question on two stocks.
Okay, go ahead.
My first stock is National Fertilizers Limited. I'm holding 200 shares at about 70 levels.
Okay.
And my second stock is IDFC Limited. I'm holding this stock at 66 levels. Should I average at the moment? I'm a long-term investor.
Okay, I'll quickly take your query to Parthiv. Parthiv, he's holding two stocks, IDFC as well as National Fertilizer. He's a long-term investor. He wants to know, should he look to average at current levels, or should he rather keep these stocks in his portfolio or no?
See, firstly, regarding National Fertilizers, we are a little wary of such names in terms of how they have performed over the past, the track record of the management. I think the fertilizer space, there are better opportunities. Names like Coromandel International, or for that matter, Deepak Fertilizers. We like both these names, the business model, the management pedigree a lot more. So I think I would suggest a switch in these two names versus what he owns. Talking about IDFC Limited, I think, again, this stock will take a lot of time to kind of recoup his losses or kind of re-rate, because one, it is having this holding company structure with IDFC Bank, which will have some transition in terms of its merger with Capital First, and also I think they are about to sell their AMC business, and probably they are not the market leaders even when it comes to the investment banking space. So I think a little wary on whether the stock would tend to deliver on numbers or not. So better to even exit IDFC Limited.
All right, I'm just going to check with you here, Parthiv. Do you have any idea about Jayashree Chemicals? It's a company which seemingly has a market share of only about 35 crore. Have you tracked it ever?
Sorry, not tracked.
All right. I'm going to very, very quickly ask Amar if he can extrapolate anything from the charts on this particular stock. The stock is Jayashree Chemicals, Amar. It's only at about 12 rupees right now.
Actually, no, I wouldn't be able to.
All right, sorry, Arvind, we did try to get your query answered.
Okay, do write in to us next time, Arvind. We'll try and get your query answers from our other experts. But I'm just going to quickly take one more query from Girish. He writes to us on Facebook. He's holding 350 shares of Bharat Forge at a price of 715. He wants to know what to do. Should he book losses at current levels? Amar, coming back to you, what's the view in Bharat Forge? If somebody's bought at really high levels of 715, should they stay put, average, or just exit and book loss?
No, I would say that they should definitely hold on to their position, because the stock is now at its a very crucial support level. So ideally there is a possibility of the stock bouncing back towards initially 620, 630 levels, and if it takes out 640 on the upside, then we could see a stock rally. The bottom seems to have formed from the stock, so ideally one should hold the stock with the recent bottom, stop loss below the recent bottom.
Okay, Girish, you can hold on to Bharat Forge. You may get better levels as according to Amar, the stock seems to have bottomed out on the charts. On that note, would like to thank all our viewers who tuned in and sent us their queries. And also thank you, Amar and Parthiv, for joining us today and helping our viewers with their queries. Well, that's all that we have on this edition of our Speak You.
Always remember that we're just a tweet, post or call away, so do keep your queries coming in. We promise to address as many of them as possible on our shows. You can log on to the website bloombergquint.com and search for the hashtag #AskSpeakYou to get all the answers to the queries that were discussed on today's episode. Up next is Power Lunch, so do stay tuned. This is Bloomberg Quint.